Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2023 in New York City. Joining me for this segment, we have Sid Powell, co-founder and CEO of Maple, to discuss the catalysts required to drive real-world asset tokenizations forward. It is great to have you with us, Sid. Welcome to TradeTalks.
Thanks for having me, Jill.
What are real-world assets and how is the Web3 industry using them?
So, in crypto, we normally try and go quite difficult with names, but with real-world assets, we've actually tried to take the opposite approach. But think of it as the goal is to try and connect assets that are off-chain, so like T-bills, houses, cars, and what we're doing with real-world assets is it's just linking that to something on the blockchain so that it can be used in these new financial products. So think of it as really it's things like houses, T-bills that are represented on top of the blockchain so that you can use them in financial products.
So what would be the benefit of that as compared to its form that it's in now?
So the form that it's in now is kind of private. So a good analogy is, remember paper medical records 20 years ago? And so you couldn't email them, you couldn't search them or query them, and that's kind of where we're at with a lot of these, what are now being called real-world assets. And so the benefit of putting them on a blockchain, so to speak, is that you can now use them in new financial products. So lending, for example, if you tokenized your house, maybe you could take out a loan from DeFi on it. What we're seeing a lot now, though, is that it's being used to give access to products overseas. So maybe you're a startup in Singapore, but now you can get access to tokenized T-bills. And you can do it as easily as sending an email. So that's really the benefit, broader access and connecting it to new financial products.
We know other areas around the world, ex-US, are starting to use these. How are traditional financial institutions participating in this, if at all?
Very good question. Slower and more cautiously, but what we're seeing is we're seeing some very large institutions like Citigroup, JP Morgan starting to use this internally. The reason they use the tokenization of assets on a blockchain is so that they can do things instantly. I used to work at a bank, and normally the process is every day or twice a day at the end of this process. So let's say end of day and beginning of day, you settle all the transactions. But up until that point in time, they're not final. And so having tokenization of these assets means that they can become, settlement is instant and final. So JP Morgan and Citi are using them for things like tokenizing cash deposits and T-bills. The real advantage is they can offer it to their clients with faster settlement, cheaper administration costs, and so that's kind of the benefits they're trying to unlock. But I would say altogether, it's actually progressed faster than I would have expected before.
Where does Maple fit within the ecosystem, and what real-world assets are you focused on?
We are what you'd call an institutional lending platform. So we try and be like a capital market, but doing this all on top of a blockchain. So the assets we've mostly focused on are tokenizing T-bills. We've done about 27 million of that. And then we've also got what you'd call like factoring. So think of this as like very short-term loans to businesses, which are collateralized by their expected payments from clients. And so we've done about, it's about 50 million, but we've got about 16 million of that outstanding at the moment. But think of it as like things that have a real impact for small businesses. So they want to take a loan to open a new venue or put down a deposit on a new premises to expand the business. We've been doing that, and I would say that's kind of where we're focused at the moment is accounts receivable, because it's short term, it's higher yield, and so it kind of ticks a lot of the boxes for on-chain investors.
So when you're doing this lending to small businesses, are you lending to them in dollars or in stable coins?
Very good question. It's stable coins.
Right.
Think of stable coins as, PayPal was probably the first most successful example of a stable coin, going back for 20 years, and now we have USDC and USDT and DAI, but stable coins are the currency of, digital finance. And so we've done all of our loans. So Maple's done about 2.2 billion in loans. All of that has been in stable coins, and that's what we tokenize the real world assets with.
What types of real world assets do you expect will be tokenized or brought on chain in the short term and long term?
I think longer term, you're going to see all assets brought on chain, and I think that the final one to go will be property. The reason for that is everyone loves to talk about it because it's the largest asset class, but it's also perhaps the most well catered to in the traditional financial system in that pricing is very good, liquidity is very good. So that's why I say longer term. Shorter term, it's these niche lending categories like accounts receivable finance, supply chain finance, trade finance. The reason those will be is the transaction volumes or the loan cycle is very, very fast. And so it strains traditional systems to do this. And the other reason is cross-border finance is expensive. And that's why trade finance with a stablecoin has next to no cost. You can send money to the UK for an exporter over there as easily as sending an email, and it clears much quicker. It clears the same amount of time as me sending money to you. And so that's why trade finance is very useful to do this on chain. Very transparent, cheap, instant settlement.
It would be amazing if they could get the mortgage process
on chain. I know.
I mean, to go through title, to go through,
yeah.
It took me 6 weeks to go through, and that was when the market was moving fast, but the work that you have to go to clean up what's happening on title because someone has the wrong social security number, you don't live in the same town, I'm not paying child support, I don't have any kids, like it's just so crazy what comes up when you go for title. And
100%. I did, me and my brother own a house and we needed to do a refinance. And that whole process, similar to you, took about 6 weeks. And even on the final day, we didn't know if it had settled. Whereas on a blockchain, you just see that like instantly as soon as it happens. It's not something that you have to find out a day or 2 days or 2 business days later. And this is one of the reasons I see institutions coming on chain is you increasingly have this move away from, we all know T+2 settlement, but in Australia at least, they want to move to T+1. And the only way to do that will be to like involve a stable coin of some sort so that they can actually move to more instant forms of settlement, because the rest of the financial system around the world is still going to operate on T+2. So that is one of the biggest use cases for bringing institutions in, is you just save them a lot of money.
Yeah. Do you think there will be any pushback from, I mean, people, there are title companies, there's different
100%.
companies that go all into the mortgage process happening. Do you think it's more of integration versus an either or type of scenario?
I do think so. So I think, Charlie Munger always says, show me the incentive, I'll show you the result.
Right.
And there will be a lot of smaller title companies that are pushing back on this because it hurts their existing business model. But for example, I've actually seen a company that's trying to tokenize title. And so the way they're doing it is they actually want to buy and roll up title companies that are, Web 2 or, using the conventional method and digitize their records and start to do it on chain, and they think that they will be able to attract new customers and get every new existing title company they buy, theoretically they get better margins out of it by digitizing it. And so this is the way capitalism and competition should work. More companies that are able to do the same thing at a lower cost and faster and cheaper should take market share, and then other people should adopt those standards. So I think title, slow, difficult, very fragmented marketplace, but I do see positive moves happening there.
All right, so I appreciate the insight. Thanks for joining us.
Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.